Hey everyone, welcome back to My Private Network podcast. I am Bob Simpson, and I've got really something exciting to chat with you about today. Something that you're not going to want to miss, even if you're remotely interested in growing and protecting your wealth. Today, we're talking about investing for income and how you can do it without feeling like you're playing roulette in Las Vegas. Let's be real. Nobody really wants to put their hard-earned cash on black and hope for the best. So buckle up. Whether you're driving, relaxing, or secretly listening while pretending to work, I've got a fun, informative journey ahead for you today. We're going to walk you through what's happening at the upcoming Investing for Income Summit. But don't worry, this isn't one of those dull finance podcasts. I'm mixing it up with a few personal stories. I usually try to throw a little humor in. Sometimes it works, sometimes it doesn't, but really going to focus on giving you a lot of practical advice just to keep you engaged. But first, let me tell you a little backstory about why I'm so passionate about this topic, investing for income. That's not traditional for most financial advisors or financial advisor firms. They really focus in on equities. They don't focus in on people's real money that you've worked really hard for, that you want to protect, and that you need for your retirement. So to get started, let's rewind the clock back to 1981. Yeah, I know that's a long way back, but picture this. Me, starting out in the industry, fresh-faced and eager, just getting started in the financial world. You know what was happening back then was oil stocks were hotter than a summer day in Arizona. Stocks like Dome Petroleum. Oh, you'd think they were the Tesla of the day. Everybody had to have a piece of that pie. Every financial advisor spent half their day talking about Dome Petroleum and other energy stocks. Now, here's the thing. Back then, the advice I was given as a new advisor was to trade those high risk, high reward stocks for the thrill and, honestly, the commissions. But you know what? That wasn't my style. And I knew it from day one. I didn't want to get into a game to help people lose sleep or even worse, to lose their hard-earned savings. I wanted to help clients protect their capital and generate steady, sustainable income without the heart palpitations that come from watching stocks bounce like a yo-yo. And to be honest, interest rates were high back then. They were in the high teens, and I wanted to help investors take advantage of what I believed was a once in a lifetime opportunity. Then one day back in November of 1981, I stumbled on a secret weapon, Canada Savings Bonds. Now I know what you're going to think, hey, what are you talking about? Canada Savings Bonds, that's not such an exciting idea. But back then, you know what the interest rate on that bond? Canada Savings Bonds, 19.5% interest. Yeah, like you're right. That's, for those of you who remember it, you're going to remember that 19.5% back then. But 19.5%, that was an amazing yield for investors. Today, people would sell their soul for even half of that. But back then, they capped the purchase at $15,000 per person. So what did I do? I got really creative and I helped people load up, and the rest was history. I was hooked. The bond boom set the stage for how I've always approached investing. Secure, reliable income over the long haul. Fast forward today, and we've got a very, very, very different landscape. Interest rates have plummeted, inflation creeping up. We've seen inflation go up, we've seen it come down a bit, but there's always that fear of inflation today. And baby boomers, a group that I'm a member of, baby boomers need solutions that don't involve gambling their retirement on risky bets. They're looking for sustainable income. So let's fast forward to today. Interest rates are hanging out in the shallow end of the swimming pool. GIC's in the 4% range. That's not exactly getting anybody too excited. And as rates decline, it's going to get much worse. You want more than that, right? You want real sustainable income that grows without taking on insane levels of risk. And that's why I'm here today to tell you about the upcoming Investing for Income Summit beginning November 13th. Now, trust me, this event is designed for people like you, those of us who care about preserving our wealth while generating steady, dependable streams of income. Now, I know the days of 19.5% Canada savings bonds are gone, but that doesn't mean we can't get creative and find new opportunities. At this summit, we're bringing in the best of the best to show you exactly how to do that. But I get it. Maybe you're a little skeptical. Oh, yeah, okay, Bob, I know. This is another summit. I've seen these, I've attended them. It's just another long-winded, jargon-filled snooze fest where experts speak for hours and I walk away with nothing. And you know what? I just attended a session last week and I walked away and I said, hey, it took me a couple hours to get there, a couple hours for the event. And I walked away and said, I didn't really learn anything. So we don't want to do that to you. We promise this is going to be different. Now, picture this: 4 expert speakers in each segment, each with just 12 minutes to share their best income generating ideas. No fluff, no PowerPoints, just actionable, practical advice that you can take home and use immediately. That's what we're delivering at the Investing for Income Summit. So, all right, let's talk about some of the traditional income options that are out there: bonds, dividend paying stocks, and REITs. If you talk to your typical financial advisor in Canada, that's what you're going to get. These are the tried and true vehicles that we've all heard of, sort of like your old dependable car that's been running smoothly for decades. The kind that, my wife was driving, didn't want to let go of this car until I decided that I would clean the snow off her windshield with the snow shovel and crack the windshield, and said, okay, yeah, let's get rid of it. But, there's sometimes you got to know when to hold them and you got to know when to fold them. Sure, it gets the job done, but sometimes you're itching for something a little newer and something that's not going to break down and cost you a lot of money for repairs. These are also investments that rely on interest rates being high and or falling, and that's not today's investment environment. Bonds, for instance, have been the bread and butter of safe income investments for ages, but the problem is these days they don't pay like they used to. 4% on a GIC isn't exactly thrilling. Dividend stocks can pay off, but then you're at the mercy of the market's ups and downs. And, we've all seen, BCE stock and the bank roller coaster that we've been through. Sure, they're going well right now, but, we just went through a rough patch for a while. Then we've got REITs, investing in real estate without owning the property. Sounds great, right? You've got a piece of the real estate pie without having to fix a leaky toilet at 2 a.m. But as great as REITs are, they're still vulnerable to market swings. And, during COVID, we saw a lot of the REITs where the value of the properties hadn't declined, but the value of the REITs dropped by 30 to 40%. And who wants to deal with that kind of volatility in their retirement years? So where does this leave us today? Well, if bonds and REITs are your traditional safety blankets, then private debt and lending are like finding a cozy, hidden spot with a view with no one else around to bother you. It's stable, it's rewarding, and it's not tied to the wild roller coaster ride that is the stock market. At the summit, you'll hear Sean Rochester, CEO of Cortland Credit, who's the Grand Master of Senior Secured Private Lending. Sean's going to walk us through how you can earn higher returns with lower risk through asset-backed lending. I know that sounds like a pretty technical term, but it's just saying that there are hard assets that support the loans that they're making to protect your capital. Think of it as Bonds 2.0, but with a little bit more juice. Will Granleys from Antrim Investments is going to be here to talk about short-term mortgages that are supported by high levels of equity in the mortgages. So people aren't just going to walk away from these things because they've got 30 or 40% of their money tied up in it. But we're also talking about some of these investments in the 8 to 9% range today. So well better than GICs in the 4% range. And let me tell you, in today's environment, 8 to 9% is like striking gold for most investors. Now, here's where it gets fun, because who said that investing for income can't have a little creativity? Ever thought about owning a piece of a hit song? No? Well, now's your chance. Michael Baker from ICM Asset Management is going to break down how music royalties can be a unique and reliable source of income. Picture this: every time somebody jams out on Bohemian Rhapsody or slow dances at the end of the evening to Color My World by Chicago, you get paid. You don't even have to carry a tune, which is great for people like me with no musical talent whatsoever. This is the kind of creative income source that gets people talking at cocktail parties. People, oh, I invest in music royalties. That's kind of cool, isn't it? Now back to real estate. I love the idea of making money through property. But you know what I don't love is I don't love the hassle of being a landlord. I've never wanted to be a landlord. I think the last thing you want in life is to be awakened by the phone in the middle of the night because a pipe burst and you've got to jump up, put your boots on, head out into the snow to go and fix it. That's why Jeff Lang from Equiton is here to talk about multifamily apartment investing, the kind that gives you consistent monthly income without the headaches of property management. And if you want to invest in real estate with built-in demand, check out Ellie Damji from Forum. He's going to walk us through purpose-built student accommodation. That's just another fancy term, PBSA for short. Students always need a place to live. And as long as there are colleges and universities, and I don't think they're going anywhere in a hurry, there will be a demand for student housing. It's an investment with built-in inflation resistance. You don't have to worry about rising costs eating away at your income. And of course, what's the point of making money if CRA takes most of it, which they do, but we don't need to give them more. That's where Mustafa Bukhari from Skyline Wealth comes in. Mustafa is going to share some golden nuggets on how to maximize your after-tax returns. Because let's be honest, it's not just about what you make, it's about what you keep. And then finally, Paul Tyers from Wealth Stewards will give us the lowdown on how to pull all of these ideas together efficiently, tax efficiently, with the focus on preserving your capital and generating equity-like returns in a diversified portfolio. We all want to pay our taxes well, some of us, I'm sure, but nobody's really volunteering to pay more than you have to. So there you have it. Those are some of the panelists at the Investing for Income Summit that's shaping up to be a game changer for anyone looking to create stable income streams without taking on too much risk. Whether it's private lending, music royalties, or tax efficient strategies, we've got something for everybody. So mark in your calendars. The summit kicks off on November 13th with follow-up sessions on November 20th and November 27th. To get details, go to privatedebtenequity.ca, click on events, and look for the Investing for Income Summit to register. If this hasn't fully caught your attention, the average return, this is a pretty amazing number, I think. The average return of the 10 managers on which we are shining the spotlight during these 3 evenings, they've averaged over 9.5%, not 19.5% like the Canada Savings Bonds, but 9.5% over the past 3 years. And over that period, none of these managers have had negative months. So going even all the way back to 2020. Now that's not nearly as good as Canada Savings Bonds at 19.5 back in the early 80s. And past performance is not a guarantee of future performance, but it's better than GICs in the 4% range and much better than traditional bonds have yielded, which have been, here's a crazy number for you. The average Canadian bond fund over the last 3 years, negative 0.3% annualized. So what that means is that if you held the bond fund over the last 3 years, you lost 0.3%, not once, but 3 times over that period. Chances are you have some of these in your portfolio, especially if you're dealing with traditional advisors at the bank-owned firms. Plus, many of the investments discussed during this summit are structured to help you keep more of what you make. Maybe you can defer taxes. Maybe you can get capital gains instead of interest, which is taxed much better. We're going to show you how. Before making any investment decisions, it is crucial to consult a professional financial advisor to determine suitability. Full disclaimers are available on privatedebtenequity.ca. Thanks for tuning in to My Private Network. Be sure to subscribe, tell your friends, and most importantly, come and join us at the summit. We hope to see you there.